Howdy, y'all. Welcome to an kind of a timely episode of Beverages with Bree. Today's beverage is water. It is getting hot and we need to all hydrate so we don't end up with heat stroke. It's going to be another one of those where I'm going to be in the little box and I've got a PowerPoint presentation that's going to be in the bigger box. And today's PowerPoint and presentation is entitled Should You Invest in Initial Public Offerings, also known as IPOs? So you may have recently heard that a company is going public and wondered if you should invest in it. And today we're going to discuss what initial public offerings are, and they're often called IPOs, and whether they belong in a long-term investment strategy. So, something to know about IPOs. IPOs generate a tremendous amount of excitement. Headlines are often focused on what the next big opportunity is, and investors naturally wonder if they're missing out on something special. We all have a little case of fear of missing out. But before we invest in any IPO, it's important to understand what an initial public offering is, why investors are attracted to them, and how they fit into an overall financial plan. Now, here's a little bit of a personal story you may not know about me. Also, don't hold this haircut against me. I was young. These photos were taken during a client initial public offering that happened back in 2011. One of our clients approached me. They were an oil and gas company and they wanted to do an initial public offering. And at the time, I was connected with a firm that had an investment bank attached to it. So I was able to introduce my clients to the investment bank, and they did not one but two public offerings. And so this was our second time on the floor of the New York Stock Exchange, being able to ring the bell and see it. So I am a little bit, I have experience in this. This isn't something that I have done. I have helped with an IPO. I have handled the friends and family for two of them. And so I'm kind of uniquely positioned to talk about an IPO. I will say being on the trading floor of the New York Stock Exchange or the first day of an IPO is incredibly exciting. There's energy, there's optimism, there's media attention, there's a sense that something important is happening. But one of the lessons I learned from these experiences is that the real investment story doesn't even begin on IPO day. The real story begins after the excitement fades, after you've left New York, and after investors are really start evaluating whether your company can meet expectations. So once again, don't hold the haircut against me. This is when I thought I could do bangs. We've learned. So there are several reasons investors are drawn naturally to initial public offerings. First, they often involve innovative companies with compelling stories. This is Yahoo Finance today. This is a screenshot I took earlier today. I would argue that SpaceX has a compelling story. It really does. So did WeWork. So did a few other IPOs that I've seen during my career. Secondly, investors hope to participate in future growth, right? Everybody wants to be the world's first trillionaire, and Elon Musk just became the world's first trillionaire. And third, there's often a fear of missing out. We have FOMO, fear of missing out. And it's funny because you can even see it on this slide. SpaceX IPO hype is massive, and the FOMO can ruin your retirement. The other one I like on here, why the biggest IPO could be a trap. There's a few different things on here that kind of talk about the negative side to IPO world. You know, when people hear about initial public offerings and they hear about SpaceX or they hear about Anthropic, they think about companies like Amazon or Apple or Google, and they think, what would have happened if I had invested early? What would have happened if I had been some of the 4,400 SpaceX employees that became a millionaire after the IPO? The challenge is investors, and we're all guilty of this, tend to remember those success stories and at the same time, they're overlooking the thousands of IPOs that never lived up to expectations. So SpaceX has been huge, and I've had several phone calls and some emails about SpaceX in the last couple of weeks. And it's understandable. SpaceX is widely viewed as one of the most innovative companies in the world. I mean, putting people in space, come on. However, one of the most important lessons in investing is that a great company does not automatically equal a great investment, or even a good company does not automatically equal a good investment. The key isn't whether the company is impressive. The key question is whether the future growth expectations are already reflected in the stock price. See, a company can be successful and still produce disappointing investment returns if you paid too much for that future success, especially when it comes to initial public offerings. And you can kind of see this. This is hit. There's an article on this page under the SpaceX IPO that hints that SpaceX is not behaving like every future initial public offering, and we're wondering when it will. Because see, the biggest issue or the biggest risk isn't the IPO itself. Imagine buying into a highly anticipated initial public offering, and the stock rises quickly after the offering. Excitement is building, similar to SpaceX today. But then the volatility arrives, and the question becomes, what do you do with it? Do you sell? Would you hold? Do you buy more? Would your emotions take over? The greatest risk in investing is not often oh dear. Sorry, we're going back a slide. The greatest risk in investing is not often the investment itself. It's not the SpaceX. It's not the stock. It's how we as investors respond when the markets become uncomfortable. Successful investing depends on not so much on predicting the future, because none of us can. We can't predict the future. It's successful investing depends on maintaining discipline, staying disciplined when uncertainty arises, because it will. It will for SpaceX, for sure. Okay, so I gave you a little sneak preview of this one earlier by accident, but Jay Ritter is a researcher, and he is from the University of Florida, and he's one of the leading researchers on initial public offerings. And you know how much I love research. We all know I'm a nerd over here. And his research has found that IPOs have historically underperformed comparably public traded companies during the 3 years following their offering. This doesn't mean that every IPO is going to perform poorly. Some have become tremendous success stories. But the challenge is we don't know in advance which companies are going to be the next Amazon and which are going to struggle to meet expectations. So this research reminds us that excitement alone is not an investment strategy. The buzz on the news is not an investment strategy. And typical IPOs do not perform well for the first 3 years, at least. So let's bring this talk back to your portfolio. Many investors worry that if they don't buy a company like SpaceX or Anthropic on day one, they're going to miss out entirely. But that's not how investing works. See, as successful companies grow, they frequently get added to the indices, to the major market indices. And investors who own diversified portfolios that hold index funds often gain exposure over time without needing to purchase the shares on IPO day, without needing to pay more than you should for the shares. So bottom line, you're still going to be able to participate, or diversified investors can still participate in the success of innovative companies. But we can do it with avoiding some of the risks associated with concentrated positions. And that is so important. The goal isn't to own every winner immediately. The goal is to participate in long-term growth while managing risk. And some of the investments within your portfolio are going to add SpaceX immediately because it's broad market ownership. So you will end up with some SpaceX within your portfolio. It just depends on the time. So if we remember only 3 things from today's presentation, this is what I want you to remember. First, a great company is not always a great investment. Second, research suggests IPOs often underperform investor expectations over the long term. Heads up, it just happens, and there's research to back it up, thanks to Jay Ritter. And third, diversification remains one of the most effective ways to participate in market growth while managing risk, which is really what is most important. Diversification works, people, and time in the market beats timing the market every single time. So successful investing isn't about finding the next hot stock. Because let me tell you, that will burn you. It's about building a disciplined strategy and sticking with it. That's the biggest thing you've got to remember. Also, you can forget that you can also remind me next time I think bangs look good, that they did not. So here's our disclosure, past performance, just because IPOs have historically not done well, that first 3 years does not necessarily guarantee future results. Past performance is not indicative of future results. All investing involves risk, including possible loss of principal. There's lots of different risks out there. Make sure you know what risks apply to your portfolio. This presentation is just educational and isn't considered individualized investment advice. I'm not talking to anybody in particular about anything individualized. And please consult with a qualified financial professional regarding your specific situation. If you're a client of Estes Financial Services, please call me about your specific situation. I just wanted you guys to kind of know what's going on because the news is going to be big on these IPOs right now. And I want you to understand how they're going to affect your portfolio in the long term, but also the volatility risks, the not really having a good idea of pricing, not really having a great idea of true public historical information. All of these risks go into an IPO. And most often, a diversified portfolio is going to beat an IPO. So thank you for watching, and go out and lead an abundant life. Bye, y'all.